In this video, we'll cover the phrase story of the chart. And for many that are adopting the RexDog trading system, you've heard me say that many times, the story of the chart. And I'll further expand on that phrase. I'll expand on what it means. For those that are adopting the RexDog trading system, you probably understand what the story of the chart means. But I'll give a little bit more background or insight on how to maybe look at it and how to apply the rules of the RexDog trading system, because that's really important, because it's the story of the chart is the foundation of the data that the market is giving you. But then when you apply the rules of the RexDog system on top of it, it enables you to take high probability trades and to trade with conviction. And a lot of that starts from just the concept of reading the story of the chart correctly and then applying the rules. So that's what we'll talk about in this video. And before I jump into the charts, we will jump in the charts, but I'm going to use the charts kind of for notes right now, and then I'll lay the foundation of the charts when we jump in and show some specific examples. So let's talk about the story of the chart. When I say that phrase, it specifically is the narrative of the data that you see before you. It tells a story. And if you get good at reading this story, and not just reading this story, the other thing that you need to get good at is, and I'll mention this later in the video, is trusting the data before your eyes. Look, if you're in the RexDog trading system, what you've said, and maybe you haven't thought about this, and maybe not everybody has said this, but the majority of people that are adopting the RexDog system has made the same choice I made, which is I don't care about fundamental analysis that much. Like, I kind of do care, but not much. I really want to design a system where I don't have to worry about news. Of course, I have to know about the upcoming news events and the government reports and everything else like that. But I don't want to have to worry about following the latest press releases, and I don't want to really have to worry about fundamental analysis. I want to design a high probability system that allows me to use 80%, if not 90%, I use more, technical analysis. Just straight up technical analysis. I want to trade the charts. That's the style of trading that the RexDog trading system is. All the rules are based around that. There's not any fundamental analysis or anything else like that. So with that as the foundation, what do we use? How can we make these decisions? Well, we make these decisions because the data that the market has given us, and then we put rules on top of that. So that's why basically the story of the chart is the narrative of the data. Now, it's going to be very obvious. Obviously, the left of the chart is history. This is all historical data. If we go to the right of the chart, the right is the future. So if we move this over, and I know some of my notes are here, that's the future. Now, I'm just laying the groundwork. Of course you get that. You understand that. But I think this quote by Mark Twain is actually one of the best ways to look at not only history, but also the market itself, which is history doesn't repeat itself, but it often rhymes. And that's a good way to look at what the historical narrative of a chart, any chart, does, is that it often doesn't repeat the exact movements, but a good example of this, and if you've been through the training, you know that measured moves. Measured moves are a reliable target, especially in 2s or 3s. Oftentimes you'll see the market move like this, and if I just quickly take this up here and say, okay, well, it moved 3% up, so my expectation potentially on the next kind of move like this is roughly a measured move of 3% up. This is common knowledge for anybody that's doing any type of charting. So this isn't, I'm sure this is just a rehash of everything you know. But that's an example of history isn't always 3%. Sometimes it's 2, but usually that measured move is really close to that 3%, 3.5, 4%, 2.5. It's right around in that range. So it often kind of repeats itself, but it doesn't. But carrying that narrative forward and understanding that is your ability. See, this is the important thing to get when you hear the phrase story of the chart. You should be able to look at a chart really quick and analyze the narrative of what it's telling you and then be able to identify the key areas you should be watching for price to stall or price to continue. I use those words purposely because when you're looking at price to stall, that's an opportunity for a fade trade. And when you're looking for price to continue, that's an opportunity for a momentum trade. Those are only two types of trades. But you should be able to look at a chart real quickly and see the narrative of the chart. Because the other thing that happens, and this is common knowledge, you get this, is that with every candle, I'd say every candle close, but every candle, you're getting a new data point. And every candle adds to the story. Let me explain this to you in maybe a way that you haven't thought about. And, you know, sometimes, I guess I won't go off on that tangent. Let me just explain this in a way that I think people don't often think about. So we're looking at BNB. I will set the foundation because we're going to get into charts. So we're looking at BNB, BTC. We'll look at the SPX. I think we'll look at a Forex, and we'll look at maybe an equity in this video. So what's on this chart is we have the RexDog foundation here above. We have the Super TSI down below, which is this. And then we have the RexDog market bias indicator down here. And we're looking at the 5-minute time frame. So here's one thing that I don't think, that I think will hopefully expand your mind in how each additional candle adds a data point and a story of the chart. This candle that's about to close, and we are at the 44 after the hour. So in about another minute, where this candle's about to close right on the weekly open. So it's trying to breach the weekly open. Well, that alone is a data point. Just the fact that it's coming up to the weekly open and it's trying to close above the weekly open is a data point. But the more salient point I want to add is that this candle, we'll just take the range of this candle. This candle here, the open or the low and the high, we'll take the low and the high. So these green lines that you see here, we scroll in so you can see it better. The data, and this is one way to kind of understand price, its relationship to each other, and time. And I have another video on price and time and why time is drastically important, how to look at time. But this candle here, I should move this down because it has closed now. It actually closed below the weekly open, so it's still trying to breach it. But this range here, this candle here has, one way to look at it, interacted with every market participant in this range. So in this range here, this whole range here, this one candle has interacted with every market participant during this time and during these price levels. And another way to look at this and think about this, and I'm not trying to confuse you. I just want to, what I really want to do with this video is open your mind and get you looking at kind of the story of the chart in the way that you're carrying the narrative forward, so you're making well-informed decisions and you're trusting the chart. But another way to look at this is that this candle had some relation. Let me use an arrow so we can, I'm sure you see the candle, but this candle had some relation to every price in this range. It had some impact on every price in this range. The same way that this candle here had the candle right below it. Let's just use this green one here. This candle here had some impact to every price in this range. And I know this is kind of it's one of those esoteric or esoteric concepts where you look at it and you say, okay, oh yeah, I get that. Or that kind of makes sense, but how can I use that? Well, this is where in your trading system, I'm just going to take the RexDog trading system out. I'm just going to say your trading system that you're adopting in your personal trading. Would it be helpful to have rules around if a candle negates or validates ranges of prices, rejections of prices, intention of prices? I'm using a lot of phrases that you've learned and obviously over past videos. But would it be helpful that you could apply simple rules to new data points that come up on a chart that you can apply within seconds that would tell you whether or not this range is valid here? Like whether or not this range is a valid range that means that you should fade this move, or whether or not you should go with momentum on this move. And the next candle that comes up, which is up here, that we just mentioned, the first candle, which is right here, wouldn't it be great, and if you don't have this, this is why I'm speaking this way, wouldn't it be great if you had rules that you could then apply to this candle that will tell you whether or not this range is valid? Whether or not the story of the chart that's unfolding is it going to break the weekly open? Right now, the story of this chart is that it's high probability it's going to break the weekly open based on the story of this chart, based on various rules that you could put in place on just these two candles alone. Just these two candles put a high probability that the weekly open is going to be broken, at least breached. From there, we're on another level where the story of the chart has changed. So if this candle closes above the weekly open, that adds to our narrative. That adds to the story of the chart. The other thing that adds to the story of the chart, which you should always be asking, which I haven't mentioned yet in the video, is where is price going? You know, I've really said that that's the number one question you should have in your mind. In order to answer where is price going, you have to ask another question typically. Where is price coming from? So let's look at that. Where is price coming from? Well, it should be pretty obvious. Price here on the 5-minute time frame is coming from here. So when you answer where is price coming from, then you look at history. You're looking at the story of the chart. You're looking at the data. You're saying, well, price is coming from here. Let's mark that area. And as we look at that area, as we look left of the chart, can we apply rules that give us more confidence in probability where price potentially wants to go? Well, you should be able, most people right now that have watched the pay attention candle video and that section, you should immediately see to the left, it's really clear that this is a pay attention candle. Many different things in the RexDog system is telling you that's a pay attention candle. And if you apply the pay attention candle rules to this candle is still valid. You can look at that in 2 seconds. You don't even need to draw lines or anything else. You can just look at that candle. You can look at all the price action thereafter, and you can look at this pay attention candle is still valid. It is still dictating the story of the chart going forward. So, since price is coming from this pay attention candle, the pay attention candle is still valid. What's the probability that it's going to sell off from here and break this pay attention candle? That's literally I said that in maybe 30 seconds, but you'll find as you adopt the story of the chart and playing the story of the chart back and just answering simple questions is where is price coming from and where is it going, and then analyzing the story of the chart, you can make quick trade decisions. Because by following simple rules of just this pay attention candle here, yes, all this narrative that happened here in the chart matters. So everything here matters. Because what do we also know about the rules? What is the other story of the chart? Well, the other story of the chart is that if we look left here, and I'm sorry, I'm usually much quicker. So look left here. Obviously, we have a failure right here, a double top, you could say. But what do we also know about this? This is both a rejection and what else is it? It's an arrow. So it's an arrow. Remember, we look at wicks in a multi-state. If you haven't watched the intention video, you need to watch the intention video in the training, because the intention video explains intention of every candle, and that plays. So the intention video gives you how to read intention. It tells you how to read intention of every candle and every wick. But that also plays into the story of the chart, because what do we carry in the narrative? See, this is where, as you get more adept at looking at charts and applying the rules, you'll immediately start to pick up on the most important things that you need to pay attention to and then trade around those. That's really the power of the RexDog system, is that I've identified the most important things that you need to pay attention to, so you don't have to pay attention to 10 million different things. And then you just pay attention to those couple things, and then you apply rules to that. So when we look at this, and let's just look at this chart here. Let me just remove this. If we look at this here, and you just pull up this chart, we'll move to another chart here soon. What's your first analysis is, and I'll just share what most people in the RexDog system would do. Okay, we're near the weekly open. We know that's a high level. We know that's a opportunity for potentially a fade trade, or if it holds above, potentially for a momentum trade if the chart backs up the momentum. Next up, we got a pay attention candle here. We apply the pay attention candle rules. Pay attention candle still valid. Oh, the next thing we got a rejection. So we've got a rejection signal, and what else do we have? We have a arrow signal. The arrow signal tells us where price wants to go. Rejection signal tells us something else, which is to look down to the next level. That's all we need to really look at right now. Now, I will ask for those that are advanced in the RexDog trading system, where are we at here in the middle of what we see here? We're in the middle of a range. So, is this a high probability trade entry? No. You're in the middle of a range. So, did you miss the best possible trade entry for this trade? Yes. Will it still potentially break the weekly open? The probability is on the side based on what the chart is unfolding as, but it could still come down and invalidate this pay attention candle. If it invalidates that pay attention candle, what does that mean? Well, if the momentum is short, we go short. If the momentum is long, maybe we fade, or if the momentum is short, maybe we fade that for another test up. Real simple. I know it took longer for me to explain it than actually you would adopt it in just looking at the chart. Let's go to another, and let me pause this here. Well, the final thing I want to cover at a high level before we move on to other charts is, and just really discuss what we've covered here, which is the story of the chart, is it's very simple, and I've said this many times, which is apply the rules of the RexDog system to key candles, biases, and levels. Those rules are there, and they're there because they're high probability rules. So when you see, for instance, when you see on this chart a pay attention candle, as we've shown here, that is still valid, don't argue with the charts. The rules are your guideposts. Like and this is something that, so here's the difference between potentially where I'm at and where you're at. And I'm just sharing this because I think this will give context. I created the RexDog system. So I trade it with conviction. So the rules that I've made, that I've learned through maybe other traders teaching me, reading books, but also more importantly, watching the market and trading the market. These rules that I've created and I've adopted, I mean, more importantly, is just the experience that I've had from just trading. Of course, I don't argue with the chart because I created these rules and I trust these rules. So you have to get to that point in your trading where you don't argue with the chart. And what I really mean about it, I can't even be more clear than this. This is like really simple. And that's not what I wanted to do. So let's go to BTC, BNB, BTC. And this is a great point to actually watch this. So what's unfolding in the actual price action now is a good example of exactly what I'm saying, which is not arguing with the chart. So in the RexDog system, you know that levels are an important trade area. So a weekly level, for instance, is an important trade area. So for instance, this was a probability fade trade at this weekly level here, where it failed. And just above the weekly level is a great entry, is your highest probability entry for the best entry to manage your trade as a fade trade, because the momentum here was long on the 5-minute time frame. And your best fade trade was a fade trade where you'd have to be out somewhere around here, but we see we're getting a little bit of a additional run here with this move here. This is a great example of, I said that it looked like price was going to break the weekly open. That's what I said, right? This is what I think frustrates a lot of people when I live trade, because it sounds like I'm double talking, but then I'm taking trades, because I don't argue with the chart. Because if I was trading this live, I would have took this trade as a fade. Why? Because my trade system says there's a high probability entry here of a fade trade here. And yes, it might close above and it might rip through it. But this is also a high probability failure point in the market. So I take the trade. I don't argue with the chart, knowing everything we've just said, which is there's a pay attention candle here with pay attention candle rules. And there's various things up here that add to our rules as well. But I would take this trade, even though I look at this chart and I say, I'm terrible with time predictions, but I say that it's going to breach the weekly open. Now, it didn't right there, but based on how this chart is setting up, providing that this pay attention candle doesn't get broke here in the next 5 or 6 candles, then the narrative of breaking the weekly open is still there. But this is where I've got to stress this point. This is why I know it frustrates people with my live trading, the new ones that I've released. I'll take this trade every second, every opportunity. I'll take this trade because I don't argue with the chart. Just like now, see this right now with this sell-off, this is actually a almost a good area to then go long right now. This is almost a good area to go long. Your best area to go long is right around here. That's your best area to go long. Now, if you understand the rules of the RexDog trading system, you're saying, well, that's about, could invalidate that pay attention candle. Yeah. It's also why you have to trust your trade system, trade with conviction, and manage your trade, because, yeah, that could invalidate that pay attention candle, which also means that price is most likely going to go lower, but it's also the best entry for where the story of the chart is right now to go long. So I hope I'm being clear as far as like not arguing with the chart. And, trading oftentimes in this type of trading anyways, usually your best entries are uncomfortable. So in the entries section, you'll see that. A lot of your entries are uncomfortable. They're just uncomfortable places to enter. Like here, when price was about to breach the weekly open, that's uncomfortable when it's above the weekly open because you think it's just going to rip up like this, or maybe even rip up like this candle here, or it's just going to rip past it. So let's go to another chart because I don't want to. Sometimes I get too long-winded on one chart. So let's look at the SPX. We're just looking at straight up SPX. I'm just going to use simple. This is simple support and resistance, but It's also how you carry the narrative of the chart forward. So this day we had a gap down and then it opened here. And if we put a line here, what do we clearly see? I mean, any beginning chartist, anybody can see this. Well, it busts through this area and then it eventually just used this area and it never got below this price. So this is a pay attention candle. No longer valid, but it's a pay attention candle. But it is what is the market information telling you? The market information on this 5-minute time frame on the SPX is telling you, for whatever reason, this price level is important. Well, I don't know why. We don't care why. Can we trade rules? Can we create rules to trade around that? Absolutely. How long will this be important? Well, could say it's been tested once and twice. So then you look at the rules of 3, and then you look at the rule of 5, and you look at both of those and say, okay, it could potentially be tested 3 more times, maybe 2. Now we're entering a point in the story of the chart where it gapped up over this. It created another important level. Remember what I said about gaps. Gaps are important. I mean, you've got half the gap fill, which is important. But then the other way to look at gaps is that this is just one candle. This is just one green candle. So you apply the pay attention candle rules to gaps, and you'll do pretty well. But we're going in the SPX today. I mean, it's a summertime. It's beginning of June, so low volume, low volatility, but it's momentum short. As we see here, it's momentum short. Now it might change over. We are below the weekly open, so that's an upside target. And that's like, once again, when we say the story of the chart, what's the story of the chart from here? Gapped up. Was June 3rd, Monday? Sorry, I should know my days. Oh no, that's last Thursday. It's the 7th today. I've kind of had a couple days off. So June 4th, gapped up. And then obviously today, if we just look at the narrative from today, the narrative from today is that it spent a little bit of time above the weekly open, and then we got our first pay attention candle right here. Our first pay attention candle is right there. That is the most important candle. For those in the RexDog system, that's the most important candle for the day and for the week. That candle right there. You should first see it broke the weekly open. Next, where did it close? It closed above the RexDog average, rejected at the RexDog average. Once again, the RexDog average does a pretty good job of kind of telling you, giving you some data points. And then this candle obviously closed below the RexDog average. And since then, it kind of been on a momentum short and continuing on momentum short. But this candle, this is why, like I said, the story of the chart. This candle is the most important candle that you're going to carry forward until this candle is fully invalidated. It's been partially invalidated. So for those that know the rules, you know it's partially invalidated. But it's also the most important candle on this chart. Now, if it continues to stay momentum short, the story of the chart continues to stay momentum short, obviously this candle still has relevance, but the further away that the price gets away from this candle, the less relevant it becomes in your recent narrative. The less relevant, it will become relevant when price maybe gets back up to that point. But the further in time it gets away from this important candle, the less relevant. As of this day right now, as it's unfolding, and it is 11:07, this is the most important candle that you need to be concerned about. So when you're looking at where is price going, where is price coming from, of course, price is coming from the story of the chart. Price is coming from up here of a sell-off of roughly 0.5% roughly. And then if we look at here and we say, well, to the weekly open, 0.3%. Once again, we're in a summer month, so the volatility is real low. So when you're looking at the story of the chart, this is why I say, yes, every candle, where are we right now, as we are about to close this candle, just after the 11 o'clock hour, so 11:08, what are we seeing? We are seeing potentially, you should see this in the RexDog system, we are seeing potentially a changeover in momentum, are we not? And what does that mean? A changeover in momentum that we should be looking at our upside target. What's our upside target? Well, our first upside target is the only candle that isn't really important here, which is this pay attention candle. And this is where not arguing with the chart comes into play. If the narrative of this move that's unfolding right now continues and the algorithm switches over, you don't argue with the chart. You start then trading with that narrative of where the price is coming from and where price is going. If we look down below, and I'm going to start adding more of this here as we go forward, you can't see this, but on the right-hand side of the RexDog, this bottom indicator down here, the RexDog market bias, we have crossed over the RexDog average on that and other momentum indicators, and we are 12% long. It's another narrative that you would carry forward into, is this low a strong low or is it a weak low? The next half hour, 45 minutes will tell you whether or not this is a strong low or a weak low. You'll be able to look over not only the RexDog system, but also you'll be able to then look at the market bias indicator. As long as that's above the green, pulls back in the right areas, then you know that this low here, the story of the chart, is where price is coming from. And you have a pretty good high probability where price is going, just based on following the rules. Then it's just up to you to basically find the best entries, the high probability entries, because you have high confidence in where price is going. You have high confidence in where price is coming from. Let's go to the USDCAD. So I'm starting to build a long position in this, just personal, just to share. So I'm waiting, I'm waiting for a breach of this level here, and I want to build a kind of a long position in the USDCAD. So I'm waiting for a breach of this low here, and then I'll start fading this move. So this is on the daily time frame. But what does the story of this chart tell you? Right here. And I'm asking like you can, I'm sorry, this is a video, you can't respond. Pay attention candle. That should be everybody pay attention candle. Okay, that should be the first, one of the first things. Well, the first thing you should be looking at is we're below the RexDog average. So what's the rule below the RexDog average? Real simple. Momentum short. Don't argue with the chart. Momentum short. Every short trade is with momentum. Every long trade is a fade trade. Fade trades, buy the on a short, you're buying the low. Momentum trades, you're buying at key momentum areas, or selling at key momentum areas, I should say, on short. So you're fading when you're going long. But what do we have here? So first thing, okay, we're well below the RexDog average. That's also a risk, because the more further away you are from the RexDog average, the higher probability that there's going to be something like this, like a snap towards the RexDog average. So that's in your mind. But we're also at a range. So typically a range wants to be breached before it snaps back. The next thing, pay attention candle. Apply pay attention candle rules. That pay attention candle is still valid. We look for other pay attention candles. This green candle is a potential pay attention candle, but it has been breached. So our next highest probability trade is below this green line, as I've outlined. That's our next highest probability trade. It is a fade trade to the RexDog average. That's our next highest probability trade. What I'm really looking for, and I'll just share, if I share what I'm really looking for, I'm looking for a breach down here and for a move that is this type of move. I'm looking for something like this. I could be completely wrong, but I'm looking for something like this. I'm looking for something that the Illuminati, if we want to use that, I'm looking for something the Illuminati has planned, that everybody is short the dollar. It's kind of like the right trade to be in. Like everybody's short the dollar. Well, I'm looking for that Illuminati move where basically everybody's short the dollar, and I want to fade that, and I want to be part of that explosive move up that no one sees. I could be way early, but that's what I'm trading against. That's how I trade Forex. I kind of trade Forex in a longer time frame, and I do fades and I do momentum. So I have been shorting this. Obviously, you look at this chart and you look at the story of the chart, and anybody in the RexDog system, if you were long anywhere after this candle, you need to like call me so I can berate you. So DM me so I can berate you. Because if you were long anywhere after this candle, other than a fade long, really short time frame, if you were long anywhere after this candle, you're on the wrong side of the trade. And in fact, we can even go back further in time and say, if you were long anywhere after this candle, you need to DM me again. And unless it was a fade trade that was a couple days long or a swing trade, you knew you were in a fade trade, you need to really say, am I really applying the market rules correctly to have the highest probability trades? Because since this candle here, you've got no other signal to go long other than a fade long. And a fade long is the further away you're from the RexDog average, the higher probability it's a good fade long trade. So, I mean, we can look at charts and say, oh, I'd be really smart if I bought here. But that is actually what you need to do. If you're going to fade a overall story of the chart, the story of this chart, everything you see here, and we can go back further. I can go back further. I don't care what went on social, economically, or financially, or how the world banks are destroying capitalism. I don't care about all that stuff. I mean, I do. But I mean, as far as this chart, at this point here on 26 May 20, there was really no point in time except for once or twice in the narrative of this chart that you should have ever considered going long in a substantial position. So from this candle here, there was never, I mean, you could say further if you want to be ahead of the curve. If you want to be early, it's back here. This is your first signal right here. This is your second signal right here. But if you want high probability trades, this candle right here, since 26 May 20, the prevailing wisdom of shorting the dollar against the USDCAD, obviously, has been correct. And you should have not argued with the chart. The story of the chart is very clear. We don't even need the indicator on here. We can turn this off, the RexDog Foundation. Just have the 20 on there and the weekly opens and close. And you can just look at the 20. Kind of tells the same story. It's a bouncing around the 20, so you don't get as many good signals. But it's very clear that the story of the chart is short. It's very clear. And you notice, I just want to be very, not upfront. What's the word I'm looking for? I just want to be very clear. I was able to identify the pay attention candle pretty quickly. The pay attention candle that guided your narrative. I want to show you how, if you haven't got this by now, I just want to show this how important this is. This one pay attention candle, applying the simple pay attention rules and the simple rules of the RexDog system, had you on the right side of the market for 26 bars, 376 days. So if you applied simple rules that you're learning and you don't argue with the chart and you read the narrative correctly for 376 days based on one set of rules, one candle, you've been on the right side of the market for 376 days. We can go to something else. And I'm just going to end the video with this. Let me think of something. I don't know. NVIDIA. That's not it. Let me do something different. Let's do deer. Deere and Company. All right. We are in a changeover in the market. So what's happening right now? Let's look at the story of the chart. Let's read the story of the chart as it in the daily time frame. Do we see a pay attention candle? Well, you should see multiples. You see a pay attention candle here. Did that pay attention candle change some of your narrative in the market? Absolutely. Initial narrative. Is it still valid? Absolutely. What is the chart? The chart is momentum long, but short-term momentum is momentum short. So what does that tell you? That this RexDog average, the RDA, probably will be breached, most likely. Which then, what will we be? We'll be momentum short. But what do we also see? Let's go back in time because I just want to reiterate the point of how these simple rules. And for those that have watched some of the more advanced training stuff, you already understand this. You already get this. But I'm trying to find the very succinct pay attention candle. Where's the best pay attention candle? Well, I don't need the best. I just need the pay attention candle. So here in all this mess, for those that aren't adept at the system or understand the system, there in all this mess is your pay attention candle that has, the way I explain it, this candle, and I've explained this in more detail in other videos, this candle, it's not the best way to look at it, but this candle right here, created this whole, allowed this whole move to happen. It's not the best way to look at it. It's the best way to look at it in this way. This candle here did not break the pay attention candle rules. And since it did not break the pay attention candle rules, and since from this candle here, it's been momentum long, you had no business ever going short except for fade trades on this chart since 30 June 2020. This was a very clear, simple 2 rules that you apply to this candle with other rules, crossing biases and everything else, that at this candle, if you're reading the story of the chart and you're not arguing with the chart, there is no reason at any point in time that you should have been short. There's profit targets along the way. There's places where you should have took profits. There's even places where you should have added. But there is no point until now, until what is transpiring now, that you should be looking at going short. So I just want to reiterate this. And since that time, we did not make capital gains. So 342 days. Let's say you bought that day, 125%. It's not a bad return. Probably need to give it all the way till the middle of July if you want to, if you're in a place where capital gains ding you, right? You need to hold it a year, whatever it is, right? So maybe you need to let it go against you a little bit and go short and maybe do a big sell-off. And maybe if you want to take the capital gains, or you want to, I'm not a tax accountant. I know nothing about taxes, okay? Don't take any of my tax advice. I'm a complete idiot in taxes. But let's just say that there's this thing called capital gains and that you need to hold something over a year. Well, maybe you have to let this thing go against you. Maybe you only made 110% or 108% on your money on Deere, because it's about to switch over potentially in momentum short, and maybe you wait for a retest to get out, but you have to wait 365 days or whatever it is for better capital gains tax rates. Let's just say, if that was a law. Well, 114% is great, especially when you just followed one candle rule and you followed a couple rules of the RexDog system. And throughout this whole trade area, you woke up every single day, and there was only about 2 areas where you actually had a little bit of concern. meaning should I maybe get out of this trade because it's going to change? But if you trusted the chart and you read the story of the chart, there was nowhere in this chart where you would have had to exit your position because you're following the rules. You're following the story of the chart. I'll just share with you the areas where you would potentially be concerned, and then we'll end the video. Here, and you should be able to see it. Yeah, that's exactly what I wanted to do with that big thing there. Here, 27 October 20, you would have potentially said, okay, is momentum shifting to short? You don't even have to read the news. All you have to do is wake up, read the daily chart at the close. After a couple days, you're back above the momentum. Okay, I don't have any, there's nothing for me to worry about. If worry is the word you want to use. Here, okay, this day, you might have woke up this day on 26 January and said, okay, looks like potentially we are turning, but still didn't get any signals. Here, maybe. Here is where you're starting to now seriously take the momentum shift right here, because the rules have already changed. In the RexDog system, you only had to look at this for 2 seconds and you saw the rules have changed. The algorithm is switched. The short-term algorithm is switched. So now you're just watching as the long-term algorithm switched. The short-term algorithm is switched. Now is the long-term algorithm switching. And if that long-term algorithm switching, where is it going? Well, you should already, for those in the RexDog system, you should see 2 immediate targets. Beyond that, those are high probability trade areas. So I'll end with this. I feel like this is one of those videos that I do hope that it added value to the overall discussion of the story of the chart and giving context here. But I also feel like this is kind of one of those, it's kind of like jazz. Like I feel like every now and then I do a video that's kind of like jazz, where it's like kind of just goes where it goes. And I have a general outline, but it's a concept that is sometimes harder to explain. But where I keep it grounded is in the rules. Is if you know the rules and you're following the rules, like I could go off in tangents. It doesn't matter. I'm still grounded by the rules. So I'm not breaking the rules. In these charts I've shown you one specific candle in these charts that literally laid the groundwork for almost a year of being on the right side of a trade. That's pretty phenomenal if you think about it. You could also say any chartist looking at higher lows and lower highs and all that stuff could probably say the same thing. Yeah, that's true. Except I don't need to draw trend lines. I don't need to draw any of that stuff. I just need to have just the RexDog foundation on here. Look at it real quick. Bam, my decisions are made. It's that simple. So I'll leave you with that. Once again, if you're on YouTube watching this, because I'm going to release this one on YouTube, leave a comment down below. Leave a like down below. Share if you want me to do additional videos on different concepts. I'm more than open to that. Look forward to seeing you in the next video.